European Union diplomats have apparently hit pause on negotiating those price caps on Russian oil. They're set to return to the table on Monday to try to hash out a deal, but it comes as warning signs over the oil demand outlook has really been in focus. Bloomberg Deputy Manager for Energy and Commodities joining us right now, Simon Casey, to talk a little bit more about this. And Simon, let's start first here with the status of those negotiations. Where do we stand right now, and what's been the sticking point?
So these talks have dragged on all week, Romain. I mean, at the beginning of the week, we were told that we could get an agreement announced before Thanksgiving on Wednesday. That didn't happen. The talks resumed today. Now, as you said, they've been put off again. Well, they tend to continue, essentially, but extended into next week. So there's clearly a sticking point. The sticking point is the price at which this price cap is going to be set. The current price level being bandied around is about $65 per barrel. That is roughly about $20 below where Brent's trading today. That's a lot higher than what had initially been expected when this price cap was first announced as an idea. And there's real discord, there's a real split between some EU members over where this price should be set.
We'll stop right there for a second, Simon. You mentioned that's about 20% where Brent is trading, but then I was looking a little bit earlier at sort of the benchmark prices out of the Euro region, basically the prices that you would pay on the market for Russian oil. And the differential, at least based on the open market pricing, is actually even worse than that. It's something like, I think, a 24-25% discount to Brent. So if they're setting it at a bottom at 65, how does that actually hurt Russia?
Well, it doesn't. And that's the issue. And that's why you've got Poland, particularly amongst the EU nations, decrying this price level. It's totally ineffective. It doesn't really mean anything. On the other side of the equation, you have a Greece, which is, as we all know, it's got a massive maritime industry. It wants to keep the Russian oil flowing, so it's got a vested interest there. The fact that these talks have failed to come up with any kind of agreement sort of suggests that they might struggle to hit on a deal come Monday. And even if they do, and it's around about $65, you're absolutely right. It almost certainly won't affect Russian flows of oil unless Russia retaliates. And in the recent past, the government has said, if countries sign up to this deal, we'll retaliate and we won't supply oil. But at these kind of price levels, they're so comfortable with them, they welcome this.
Right.
They signaled this week that actually they're reassessing their position. So this thing could be completely toothless.